Okay, guys, so the ZOOPLA UK rental market report is what we're going to cover today. And Jim, the ZOOPLA market report is research and insight up until December 2023. We're going to cover for the rental market. There's quite a lot of good stats in here. It does refer to UK as a whole, and obviously it refers to London a lot. We know that, but obviously it's still very much reflective of what's going on in the market overall.
I think you're absolutely right. You know, the UK rental market report that comes out of ZOOPLA every single month. It's kind of like a Bible.
Yeah.
As such, it's measured the same way every single month. So it gives us a good idea of from month to month how the market is responding, how the rental market is responding, and it's kind of applicable right throughout the UK. I mean, it's not unique to one individual area, like for example, like the sales market is.
Yeah,
it's mainly right across the board because it's driven by lack of housing supply. That's ultimately it. It's lack of housing supply that drives that whole market, and the lack of rental properties available as well. So yeah, okay, over to you. Let's talk about the executive summary then.
Yeah. So I mean, I'll just quickly bring in obviously the main figures from what the market report's saying. Obviously, we're up 9.7% on annual rent inflation for new lets in the UK. Okay, and it's down 11% year on year, and that's the change in rental demand. Okay. And then what they're predicting is there's going to be a slight drop, and there's going to be a 5% UK rental inflation for new lets in the year to come. That's 2024. Okay.
Do you think that's going to be the case? Do you think that'll be the case overall? Do you actually think that'll happen?
Maybe not regionally, but obviously their predictions are that, and we have it on we've got the graphics to show where they predict things are going to be for the year ahead. So, but as I say, regionally it might be different. You said, Jim, obviously the executive summary, the UK has passed its peak rental growth. Okay, so we expect ZOOPLA expects annual UK rental growth to halve over 2024 to 5%, like I said, which is the lowest growth since 2021. But like you said, Jim, will that happen overall? We'll have to wait and see, really.
It'll be interesting to see how that applies to Scotland, considering the fact that we've got rent controls here, whether that's applicable or not. I wonder comment on that.
That's where the differences will come in, because ZOOPLA are saying London will lead the way with the slowdown, with rents expected to increase by just 2% over 2024 as affordability pressures and things impact the demand there. So, but demand is weakening slowly off a high base, down to 11% year on year, as I said, but still a third higher than the 5-year average.
Okay.
Now, there are signs asking rents have overshot in some markets, and I've seen that as well, and evidence of growing resistance to higher rents as well. Okay. Now, this obviously, the next point, obviously, the supply and demand imbalance in rented housing is not going to disappear in 2024, and this is their predictions, but the market will become more into balance, if that makes sense.
It's impossible for it to disappear anyway, because I mean, there's people there, and it's not as if they're suddenly going to build 250, 300,000 houses that are required. I mean, I know there's more than that, but they're not going to build that in a year because they can't even. I mean, the Scottish market can't even build, 25,000 a year, let alone, all that. And there's a backlog already in the system for the UK overall, and including Scotland, including Fife as well. There's every single person out there will agree with me straight away with the statement that there's a distinct lack of undersupply of rented accommodation, especially in the social housing market and council housing market.
Yeah, and it's like you say, Jim, it always comes back to the factor that there's a lack in housing supply. So rents in regional markets are set to outperform where affordability is less of a constraint on rental growth.
You will see that. You've got a graph. You've got a graph to show us. The rental market supply and demand imbalance starts to turn and show us exactly what that is.
As I say, ZOOPLA is really good because it has the graphics to go with it. So Just give me a second. Yeah, this one. So the graph that goes with that one here. So you could see that clearly there. So I'll just explain how this works. So the rental market supply and demand imbalance. So you can see it there. Obviously, the rental demand in the first. If I hover over, can you see that there?
So purple's the 5-year average. So purple's what it is the now versus 5-year average, and the black is what it is the now versus 2022, which is effectively last year.
Yeah.
Now it's interesting to see that rental demand there. Look at rental demand on the 5-year average is through the roof.
I know, that's
up
up
at 32%. Rental demand against last year's is -11. I never expected that.
I didn't expect that. I was quite surprised when I seen that as well.
Do you think that's because rents are moving up so high, therefore demand is actually dropping because less people can afford to move, so they're sticking where they are?
Yes, and I definitely see that in areas where rents are starting to creep up quite exponentially. That's the kind of trend we're starting to see, and that's probably where that -11% is coming from.
Yeah. So stock of homes for rent. Stock of homes for rent. So that's versus the 5-year average, it's 18% down. So there's less houses to rent versus the 5-year average,
which is
and there's more versus 2022. Surprising again.
It is, yeah, because I'm not surprised. Obviously, the stock's down on the 5-year average, but in comparison, to say that it's versus 22, obviously it's a 20%. So
that's obviously right across the board, though. So when you think about it, I mean, England take a huge proportion of that in terms of the numbers, and their rents are astronomical compared to ours. I mean, we talk about £1,000 a month. They talk about £1,000 a week.
Yeah, I know.
How could anybody afford that? That's almost impossible. £4,000 a month or more. Jeez, that's eye-watering.
Yeah, I mean, here in certain areas, if we're talking 2,000 or just on the other side of that, is really high. That's a high level of rent for Fife. But obviously, like you say, you go south of the border and things. That's just that would be a drop in the ocean.
So interesting enough, the next one, the flow of new supply, which is the next part of that graph on the right-hand side, -6% down on the 5-year average, and it's basically level compared to 2022.
Yeah.
So basically, what we're saying is there's no more flow of new supply coming onto the market compared to last year, but the stock of the number of homes for rent compared to last year is more, and the rental demand is down. That's kind of just following the same pattern as the sales market. And this is what I've always said before. You tend to find the sales market gets the boom first, then almost a year or 2 years later, the rental market then experiences the same boom because it's natural. It's a natural. It happens every single time. It's never been anything different.
Yeah, I've seen that trend before. It's like you say, the sales market will show a certain trend, and then the rental market will follow and suit.
So that argument then is, for God's sake, don't sell your rentals. When the price of your rentals go up, don't sell them, because the price of the rent's going to go up a couple of years later to get a more comparative return. Again, that's what it is, isn't it? That's why it's going up, because the price of the rental property is going up. So therefore, it makes it more attractive for the landlord to sell it and make the capital gain. But in order to get the right return, if he keeps it or she keeps it, therefore the rent has to go up to get the right return. And that's why a year or 2 years later, it actually goes up to be almost an equilibrium with the existing rents in terms of proportion of return. But like, you get the typical gross yield of 6%, and people kind of benchmark it on 6% gross yield. And so if the property is 100,000 1 year and it goes up to 150,000 a couple of years later, you've kind of got to get your rents to go in line with that. So technically, your rent would have to go up from £6,000 against 100,000 a year to £9,000, which at 150,000, to give it a comparative return.
Yeah, there definitely has to be a realignment for the numbers to work, especially if you've got those changes, and obviously, and especially the changes like we see just now in mortgages and bringing mortgage rates. So
So
the change,
what is ZOOPLA going to say then about the rental market in the turn of 2024 then?
yeah. So the rental market, obviously, the predictions for 2024. Obviously, we are saying that the UK rental inflation they're predicting is 5%, and that's going to obviously a change from the 9.7 that we're finishing this year off. So there is a chronic mismatch between supply and demand, and that's been the defining feature for the private rental market for the last 3 years. And UK rents for new lets have risen by a third, and that's or around about just under £3,500 a year on average during that time. So if we look ahead, we are now past peak rental growth. We expect, I say we, ZOOPLA expects a major a deceleration, and rental growth over 2024 as demand moderates in the face of maybe worsening affordability and supply improves slowly. Then there are already signs asking rents have overshot in some markets, showing resistance to the higher rents, and we see that in areas.
I think that's quite normal, isn't it? It's normal for rents to go, or even house prices to go right above and then kind of come down to a leveling off again. It's it's that initial momentum.
It's the peak and trough thing.
Yeah, well, it's like I'm trying to give an analogy. It's like a plane taking off. It goes to a certain height and then it goes down and then it kind of comes down again, levels off, and just keeps going from there.
Yeah,
kind of similar to that. So what's expected of the rental growth market then, in terms of where it's going?
So, I mean, the slowdown of the rental growth of the market, it will be led, like we said previously, it will be led by markets like London, the most expensive markets to rent a home, and where affordability is weighing most on demand as well. So London also accounts for about 30% of the rental supply, which means trends in London have a kind of disproportionate impact on the growth rates recorded by the other UK rental index. And ZOOPLA expect the UK rental growth to slow, as I said, by 5%, and by the year coming, so by December 2024, and that's down from their 9.7% that we're finishing this year. So they anticipate growth in London to just be over 2% or 2%, right. And that's it's the lowest since it's been since 2021. But yeah, we do have we've got quite a good graph to go through with this one. So just give me a second to share this.
Yeah, it gives you a good example about what it looks like.
Yeah. So let's have a look at. So number 3. Here we go. So let's look at this one. So this is the annual rental growth, how it's to slow over 2024. Now you can see here just that the perforated line along the end is on the other side of that is where their prediction is. But if you look back, so we've got December here right through to December right through to the end of this month. So you can see how it goes up.
So that's December 2013, every single year, December, June, so every 6-month period.
Yes.
Every 6-month period since 2013, that's going.
Yeah. And then you can see it dips there in 2021, that'll be COVID lockdown time.
Yeah.
And then obviously we've got the last 2 years, 2022, and then right up to the end, just about where we are today. You can see how it comes up there. That's UK as the fainter line, London's the dark line. And then past that perforated line, they have the predictions for the year ahead. And that's
now, ZOOPLA instantly is the biggest data gatherer of rental information statistics right through the UK. Even the government don't have as much information as ZOOPLA because it's all the letting agents that use them. So it's quite interesting to see that this flies in the face of the script that we get from the Scottish government saying that rents have actually gone out of control over the years. And it's like, wait a minute, according to ZOOPLA, rents have only gone up 2 or 3% every single year. And even when it came to COVID, it actually dropped, which offset that. And then it was only really that only really applies to 2021, but that's a natural correction in the cycle because inflation was more than that every year. So why would you expect rents to be less than inflation when inflation was up at 10 and 11%, and yet rent, according to this, at its very peak was only about 11.
Yeah.
So it flies in the face completely of what the Scottish government's saying in terms of the rhetoric for rent controls, doesn't it?
It does, yeah. It does kind of contradict that quite quite clearly. I mean, obviously that snapshot there, that's the last 10 years. And the biggest changes obviously are in the last 2 or 3 years, really.
We should get Patrick Harvey and Paul McLennan on, the Housing Minister and the Minister for Tenants, to actually answer for this then, why it's different than what it is.
Yeah, it would be quite an interesting.
Why does ZOOPLA, the biggest data gatherer of UK statistics and the rental market, the actual rental market now, have show a completely different picture than the Scottish Government shows? Because the Scottish Government have chosen to choose statistics from a small organisation that only gathers data for city statistics and not for villages and towns like ZOOPLA does. So while ZOOPLA has a true reflection of the rental market, the Scottish Government's data is only a reflection of the city market.
Yes,
it's based on information from CityLets. We are not a huge data gatherer.
Yeah, and that doesn't give you a true picture of what's actually going on. And ZOOPLA is quite good, like you say, obviously, and that's a good snapshot of the last 10 years. So the UK rental growth dropping into single digits. So the UK rental growth slowed to 9.7% in October 23, and that's where we are at the moment. Now that's down from 11.9% a year ago, but ahead of earnings growth, 7.9% on a regional basis. Okay, so rental growth has slowed most rapidly in London, like we said, and then down from 17% a year ago to 9% currently.
But then you look at average salaries, and if you look at the average salary 20 years ago compared to today, the average salary has actually doubled. It's gone up 100%, by the way, the average salary from 20 years ago. But if you look at the average rental inflation over the last 20 years, I mean, you've got the last 10 years there where you had just 2 or 3% every year. It's certainly nowhere near the 100% in what salaries have gone up. So therefore, the complete argument that rent's out of control is completely wrong. Rents are actually rebalancing and realigning to the percentage of salaries that they're meant to realign to. It's a natural economic cycle.
Yeah, and it does go on to explain about obviously employment and things having an affecting factor in that. So the contrast with the trends across other regional cities, and obviously not just looking at London, where rental growth is holding up largely due to better affordability than southern England and things as well. So rental growth in Scotland continues to gain momentum, with rents up 12.9% compared to 11.4% a year ago. And rent controls in Scotland are resulting in landlords and agents pushing rents higher to allow for the fact that rental increase will be capped at 3%, at 3% a year over the duration of any tenancy. And it's clear evidence of how rent controls can be counterproductive and distort markets.
That's not our words. That's ZOOPLA's words. That's right from the house. That's right from the mouth of the people that are gathering all the data and understand the UK market in terms of rents, and especially Scotland as well. We'll just say that again. They're saying it's clear evidence of how rent controls can be counterproductive and distort markets. Patrick Harvey, you're tuning in.
And we've already seen evidence of that, Jim, anyway. So let's look at the 4 factors that have driven strong rental demand. Now, a combination of factors have pushed rental demand well above average over the last 3 years. Firstly, the reopening of the economy after the pandemic, restrictions and things were lifted, and that was about mid-2021 onwards, including a reassumption of international travel. So that was one of the factors. The links to the second factor is the strength of the labour market, with jobs growth boosting demand in the rental homes. We've seen that as well, obviously. And thirdly, higher mortgage rates have made access to home ownership more expensive. This has kept would-be buyers in rented homes, and we've seen that definitely, and reduced available supply. So, and finally, obviously, record levels of immigration into the UK, particularly high numbers of overseas students and things, have boosted demand.
It's quite interesting when it goes on to say that you can look at that negatively in the fact that higher mortgage rates have made access to home ownership more expensive, and there seems to be something in this in our culture, in the UK culture, that if you don't own your home, you're less of a person. It's a bit weird. And yet the rest of Europe and everywhere else doesn't bother about that at all. They don't see home ownership as some sort of a man's home is his castle sort of thing.
I was just going to say that England, you say that Englishman's home is his castle.
Yeah, and do you think? Well, I think I know the answer to that, and it's the fact that the banks love to give people mortgages. And they see home ownership as the ultimate aim, because obviously it falls into line with the banks and the fact that they get to sell people mortgages for it, and it keeps them going. I think I've got a funny feeling, Richard, that proportionally per head of population, I wouldn't be surprised if we were one of the largest proportion of mortgage holders per head of population in the whole of the world.
Yeah, that wouldn't be surprising if I was to see statistics that back that up. I wouldn't be surprising, to be honest, because everybody has that mindset, like own your home, own your home. And I mean, we are gradually, people are starting to change their mindset in terms of renting and the benefits of doing that. And we've spoke a lot about the costs for entering and exiting and things compared to buying as well.
The younger generation have actually caught on to the fact that they want mobility of labour as well, and they don't want to tie themselves down with a mortgage for a period of maybe 2 or 3 years, when in actual fact it's like what you say, the cost of entry and cost of exit for buying a house and selling a house in 2 or 3 years if you're moving again is prohibitive. So you may as well just rent in that period of time.
Yeah, definitely. So rental
demand and weakening of a higher base. What are the signs? Are there signs?
Yeah, I mean, there's signs that the combined impact of these factors is starting to kind of plateau. And the data in ZOOPLA shows that rental demand has been steadily losing momentum over the second half of 2023. So this is illustrated by the number of inquiries per home for rent. This is quite an interesting one for me. This is quite interesting, because I know how much inquiries come into us. The measures peak at over 35 inquiries per property in the summer of 2022. Would argue that we had more than that.
That was a way to say, well, wait there now. We must be the other end of that average.
Yes.
We must be the top end of that average, because it's like we've got more than 35 inquiries per property.
Yeah, and there was a seasonal peak this summer, but at a lesser degree, they're saying. And we are now in the usual seasonal slowdown that will extend into Q1 of 2024. And I've got they've provided a graph here which illustrates that. So let's have a wee look at this one. So here we go, and this is inquiries per rental home. They're saying down year on year, and again, this is the UK as a whole, and then London's the darker line that's there. So this goes back to, we've got May 17, November, May, November. So back to 2017, right up to November 2023, which is the month just ended. Okay, so you can see that inquiries peak at 2022, which I'm not surprised, because I mean, we experienced that. It was extremely busy for inquiries. That has come down considerably, but still higher than it has been in a lot of years previously.
Yeah, I think inquiries in Fife especially, when you look at ZOOPLA right now, I've actually just did a search, and this will be interesting for us to benchmark this every month. But I can see 75 properties available for rent right through Fife. 75 available.
And the whole of Fife, and I think
that's according to ZOOPLA, and most people go on ZOOPLA, and most agents go on ZOOPLA in terms of rentals to do that. Rightmove obviously costs a bit more. It'd be interesting for me to check Rightmove as well. So you should talk amongst yourself while I check Rightmove.
That's fine. I'll just continue on while you're doing that, Jeremy. That'd be great. So the softening of demand reflects several factors. So the first one is the reduction of one-off pandemic impacts. Obviously, we've seen that, and also just take this away so we could. Also, the slower growth of employment and early signs of slower income growth. So that's something, obviously, that the slower growth of employment is probably because we've got such a high rate of employment already. I would think. And then high rents are falling, and falling mortgage rates are supporting first-time buyer numbers. which is easing some of the rental demand a little bit, but obviously that'll change by region.
Yeah, so we're looking at rental demand there. I mean, Rightmove has 69 available for let out throughout Fife. So 75, 69, obviously another agency's on with the extra 6. They're both the same. It's no adding them together. But interestingly enough, when you go on and you click on including ones that are let, Rightmove goes from 69 up to 100. So there's 30 let. So basically, what I was saying, a third of what's on the market right now is already let agreed. But there's only 100 properties right through Fife. I mean, there's 170,000 households in Fife. 100 properties for let. That's mental.
Yeah.
So I think the buy-to-let market's still got a lot of demand to go. I still think there's a lot of mileage in it, especially for Fife.
Yeah, Fife's a really good area, and I can see that. Obviously, I see that day in, day out, not just on like a quarterly basis. I see it every day. But
I think it's a lot to do with getting your numbers right, though. First, make sure you get your numbers right in terms of what you're going to pay for the property to what you can rent the property for. You probably just play into the fact as well that you might have to rebase your numbers on a lower rent level just in case rent controls have an issue or something comes in, it might change that. But if you get the numbers right in the beginning, you've got a bit of tolerance in there. I think it makes sense just to continue to buy to let in Fife, doesn't it, Richard?
Yeah. Oh yeah, definitely. But like you say, Jim, I mean, it's always smart to make sure your numbers work and do your proper risk analysis and things as well, and your proper due diligence for any investment. But Fife is an area that has got a lot of potential. Back to obviously the figures here with inquiries and things, and it's important to note that while the UK rental demand is 11% lower year on year, it does remain 32% above the 5-year average. Okay, and then likewise, London demand is down 20% year on year, but it remains above its 5-year average as well. So the UK as a whole, it is still higher than the 5-year average, although maybe things have changed in the last year.
And I think you're right. The 4 factors that have driven that strong rental demand is immigration. That's here to stay, whether we like it or not. And that won't be solved overnight or even in the short term, possibly not even in the medium term. Higher mortgage rates, well, I think that's just going to continue round about the 5% level. Interestingly enough, base rates were actually kept at 5.25 again today. Base rates are on hold again today. So it'll be interesting to see if this actually gives the sales market a wee boost in terms of demand again, especially with the Boxing Day bounce coming up for Christmas. People don't realise we're still selling houses right now. We've just done a deal with one over 400,000 in Leithen, just there the now. Sold, done and dusted. So it might take a bit longer to sell, but they'll still sell. And you've got a unique period right now, especially even when renting and selling, is the fact that no one else is putting their house on the market now.
No.
So therefore, you've still got all these people on their mobile still looking at property, especially when it comes to Christmas and after Christmas, because Christmas is over then, nothing else to focus on. Let's go back to looking at property again. That's what people do.
And that's why on this side of the Christmas and New Year break, it's the best time to get your property on the market, because even though it's not going to sell maybe straight away, you're going to be there and ready to go as soon as everybody picks up their phone in the new year.
I think rental market-wise it's quite good as well. You know why I'm going to say it's quite good? Because generally people wait to split up after Christmas.
Everybody falls out after Christmas and New Year.
It's Christmas that everybody falls out of, or what it does is they're falling out already, but they hang on till Christmas is over for the kids, and then they go their separate ways. So there's where the demand actually starts to pick up after Christmas as well. So there's unfortunately that's just the way it is, but there is an opportunity there for people that have got property to let to capitalise on that, and the very fact that people are needing accommodation still. So I think these drivers will always be there and they'll always continue to be there, and I can't see anything changing anytime soon, especially with the fact that employment's still at a record low.
Yeah, and I think the supply and demand imbalance thing in rented houses is not going to go away or disappear in the next year.
And that's ZOOPLA says that.
Yeah. However, the market is set to move into balance than it has been, more balance than it has been in the last
more balance than it's been.
Yeah.
So okay, so asking rents have overshot some areas. What about that then? What about average rents and asking rents? What you got to say about that? And what does ZOOPLA say?
So what ZOOPLA says is obviously there's one important indicator of underlying demand, and that is the impetus for rental growth, and it is the extent to which asking rents for rental listings are being reduced to attract more applicants.
Yeah.
So, I mean, people have been pushing and pushing rents, and now they're thinking, well, stuff's not renting, we're going to have to start coming down. So asking,
yeah, this is where the natural ebb. Are you seeing this in Fife though? Let's be honest. I mean, are
not
you
really.
seeing
No,
this in
we're not
Fife,
having it from.
or are you seeing it at the top end and more the top end, or are we not seeing that at all?
I've seen a few of the higher value rents have to maybe realign slightly. Your mid-market rents, you know, you're talking things like £700 round about that rent, no bother. Things that are up to £1,000 a wee bit more, that they have been a wee bit longer to rent, and I have seen a few realignments of rent, but nothing drastic in Fife, especially not in our stock anyway.
Yeah. That's because, as you said, £700 is 25% of somebody's income, of the average income. So the £700 rent is 25% of the average income, and rental poverty, according to the government, is anything over 25%.
Yeah.
So anything up to there, which is the £700 mark, anything below that is actually still very, very affordable for people in Fife. Therefore, they will always be occupied as a result of that. And high occupancy rate means a good return.
Yeah. So, and that's the kind of trends that we're seeing anyway. Asking rent reductions of over 5% at a national level are currently tracking in line with the second half of 2020. Okay, when the pandemic hit and demand, supply expanded, and the rental growth slowed down. Okay, so the volume of asking rent reductions of over 5% is currently the highest in areas like London. But 10% of rental listings in November 2023, which was just last month, were impacted. Meanwhile, the proportion across the rest of the UK has also jumped to 7%, and that's the highest it's been in the last 5 years.
Okay.
So this is evidence that the strong upward momentum of rents over the last 3 years is meeting some resistance as renters are facing growing affordability pressures and earning growth starts to moderate. So obviously salaries.
This is exactly the same reflection of the housing market, isn't it? But just delayed. And as I said before, it's the rental market always goes up after the housing market goes up.
Yeah. So yeah, and these reductions are evenly spread across the market by rental price band, which is concentration in the 1,000 to 1,500 per month bracket. I've also got quite a good graphic here that depicts this. So this one here,
and that's since every 6 months since 2017, isn't it? That one that you're showing.
Yeah. Yes. So this starts. It's May 17, November 17, May 18, and all the way through to May and November this year. So you can see there in May and November 2020 where that peaks. So this one, I mean, it is asking rent reductions of 5% spike higher. Now this is London and UK Excel London, but it still gives a good picture of what's happening overall. But you can see there the pandemic, that's 2020 into 2021.
It's quite interesting. It's quite interesting when you see towards the right-hand side in 2022, 23 and November 23, where it almost mirrors London, but just under in terms of the rental level. You know the percentage, see that zigzag, the way that's going, and then the spike upwards. And then London's going a bit. London's so we're not reducing rents as much throughout the rest of the UK, which excludes the London area. But London is obviously reducing them a lot more because as I said, the prices are astronomical. I mean, how could anybody afford that? And I think everybody ran at the time to try and get rentals, but now it's going to level off, especially in London.
Yeah,
it's quite normal. It's quite normal, Richard, for London for England to do this. Now, if you track, for example, in rental levels and even in house prices, when you track the house price since 1984, because that's when they were all this information was gathered in since 1984. I've got house prices going back the last 50 years, actually, average house price, but it's like it's 50 pence for a house 50 years ago.
In comparison, it's great.
£100 50 years ago, which is weird. And it's gone up 8,004% since then in terms of house price growth. But inflation's only gone up about 1,300. which shows you straight away that housing is a great investment, especially because you're getting rent at the same time as well.
Yeah.
But it's interesting to see that since 1984, the UK market tends to be quite up and down, quite volatile. But if you look at the Scottish market on their own, if you see it, it tends to be just a J curve. You know, it doesn't. There's no really anything other. And then when you get to the pandemic, when you plot it out on a graph, you see the upside sort of the hockey stick sort of mentality. But you actually see the pandemic, it goes bloop, and that's it. Whereas the English market, the pandemic, it goes whoosh, 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 and then goes back. So the Scottish market, especially the fight market, and other markets in Scotland are very, very resilient in terms of.
Well, just going to say, do you think that means we're a lot more resilient than other areas of the UK?
Yeah, definitely. What is Zoopla going to say about the outlook then? And we'll finish off.
Yeah, so the rental market is starting to cool, and having run really hot for the last 3 years. The slowdown in rental growth over 2024 will be kept in check, but an ongoing scarcity of supply brought about by low investment in the face of more regulation and higher mortgage rates and things. They say that, but I mean, that's their view. I know that obviously mortgage rates and regulations and things can be a wee bit of a deterrent, but I think that in the right situation, it can still be a good market for investment. In fact, I know it can be. Again, London will lead the way in the slowdown in rental growth on slower employment growth and affordability pressures.
Yeah,
because the cost of things down there. The average London rented household of 1.25 people spends 40.2% of their earnings on rent, compared to the UK average, which is 28.4%, which you said, Jim, about 25%. We are here. So, and we Zoopla expect rental growth to continue to run ahead of earnings growth in regional housing markets over 2024, with rents rising between about 5 and 8%, and that's largely due to the underlying scarcity and headroom and rental affordability for rents to rise any further. And obviously, remember, we have the rental caps and things here.
Interesting. Have you got the rental highlights graph of the actual UK? This is quite interesting, because this actually tells a really particular story, especially for people out there that are buying into this rhetoric about the Scottish government and what they think. Just could you zoom in on that? Is that possible? Just go to the top. You've got the wee zoom in. You've got the wee magnifying glass. Just hit that wee zoom button on the top of it, and it should zoom in on it.
Yeah.
That's it. Okay. So look, it's interesting to see there at the Edinburgh sitting at average of 1,259 in the top right hand corner. Glasgow's sitting at 930 at average. But interesting, right across the whole of Scotland, again we're saying it's £777 on average for rent. Now you could argue it's gone up 13% year on year according to Zoopla statistics, and that's absolutely factually right. But if you look at 770 and multiply it by the 12, which is the monthly, and divide it by the average salary, which is 33,000, you're still about 28%. That's not a lot in terms of, that's not a huge amount. That's not a huge amount, and there's a strong equilibrium there in terms of it's always kind of been 28%. If you look at the average mortgage is significantly more than that in terms of average mortgage value. And fine, you're owning your house, but remember, the mortgage is the least the least you'll ever pay, because you have to pay for all repairs and improvements and everything else over and above
your mortgage payments, your minimum.
Your minimum you'll pay, whereas the rental value is the highest you'll pay. So that's where the attractiveness of renting comes in for a lot of tenants, because if the average is £777 a month and the landlord takes all responsibility for repairs for electrics, plumbing and the roof, and renewing the kitchen every now and again for dilapidations, bathroom and carpets and all the rest of it over time, then why would you then just consider renting? Because then you're not tying all your capital up in one property. Therefore, you'll never ever be able to get that capital out unless you borrow it back out. Therefore, you'll have a mortgage again, or a bigger mortgage. So you could see straight away there how it's a lot more attractive for some people, and the younger generation especially, to rent overall.
Yeah, you're definitely right, Jim, and that's where I think we'll see, like we say, generation rent coming in, because they've become wise to this fact, and they And obviously the current situation with affordability and the cost of living and things as well, people have shifted the way they think about things, and really as having the prospect of owning your home really all that much.
Absolutely. I'd be interested to hear anybody else's thoughts on that. That's kind of it, isn't it, Richard? That's just in the roundup for ZOOPLA's UK rental value statistics. It'll be interesting to see what happens next month. But again, as I said, 75 properties right through Fife available to rent, and 69 according to Rightmove, but 75 is the true figure, out of 100. And it's like, no wonder there's so many people chasing so few properties. If anybody has a property out there which they need to get back in the market, which is sitting empty right now, please give us a call, because I tell you what, there's a huge amount of demand for any property at this point in time. We'll make sure you're compliant. We'll give you all the advice and information you need to do for everything to get it compliant. And once you've got that all up and running, then it'll be a good earner for someone, and it'll be another house into the market. Therefore, the more houses that come into the market for rent, the better it will stabilise the rental market and possibly bring rents down overall.
Yeah, and I always jump on and say when I'm in certain areas, if I'm bringing stuff on and how popular things are, and it used to be areas like things like East Nuke and things like that where property obviously is quite popular anyway and quite scarce.
Yeah,
I've even seen it in areas like Glenorchy and Kirkcaldy, and you know, I've got so many people on one property. I put an apartment on in Kirkcaldy just now, and I've just inundated with people. So
yeah. So
yeah,
that's just a wee, and if you are a tenant, please bear with us. We'll not be able to answer everybody back, because we literally have to employ somebody full time just to answer people back and say they were unsuccessful. So the best way of doing this is actually message direct with your contact details on the property you're actually inquiring about. You'll get an email back, and the email will basically say, look, could you fill out this form? And once you fill that form out, we'll get all the necessary information. We'll be able to process your information, and if you are a likely candidate for this property, we'll get in touch with you and we'll get you around for a viewing.
Yeah, the key is to get all that information back to us as quickly as possible, and please be patient, because as soon as we get that, we will process it as quickly as we can.
Yeah, there seems to be a rhetoric out there. It's like, just because I've called you, I should get a viewing. And it's like, that's not the case.
That's not how it works anymore.
You need to fill out the paperwork first and make sure that you, more or less, you make sure you qualify for the property.
Well, it's called a pre-qualifying stage. But we try and streamline it as much as possible. So
perfect. Thanks for your time, Richard. Really appreciate that.
Right, thanks, Jim, for joining. That was good.
And we'll look forward to next month.
Good. Okay. Right.
Bye-bye for now.
Bye.